All right. Good afternoon, everyone. It is Friday, May 15th, around 12:30. I just want to continue off from a couple things that we were speaking about yesterday, starting off with the parabolic SAR on the weekly chart and how that relates to the monthly chart and how we can maybe get a clearer view of where we are in price action today from these two views. So I just went ahead and outlined where the parabolic SAR line is on the weekly chart, just so that we can see it on the monthly chart as well. So here on the monthly chart, we could see some similarities between our previous cycle, our most recent cycle, and our current cycle today. So we can see that the parabolic line from the weekly chart is a decent distance away from the parabolic dots here on the monthly chart, which is similar to our historical data over here. Though I don't think the history will repeat itself, I do think that it will rhyme in a way. Um, so here we are at the parabolic line today. So in our previous trend, we crossed and we closed our monthly candle above that parabolic line, and we did come down. We broke it on the downside as well to retest our pattern from here, which was a ascending triangle pattern on that weekly chart, which we can speak about later on. But that was a simple supply and demand chart pattern where the demand is rising as the supply is staying consistent, and eventually that demand outweighs that supply, and we see a break up in price. So if we can extrapolate something from that onto our current day and say that we have a similar pattern playing out, though we don't have a ascending triangle pattern, I believe we do have some type of continuation pattern here, which is known as a broadening wedge. In this case, it would be an ascending broadening wedge since we are descending broadening wedge since we are angled towards the downside. And that wedge would look something like that. Just make it a different color so it's a bit easier to see. Though I don't think that this is exactly what we're doing today. Um, I do think that it could be a possibility. And these do typically break out to the upside, and it would happen somewhere around this point for this trend, for this pattern. So if we do break up upwards over here, I would expect a retest of this region over here, our supply, and then we could maybe think about a test up towards that 14,000 region, which would be our monthly close as well, back from our 2018 cycle. And this would be an extremely major close. If we were able to close around there, I would be very bullish on Bitcoin from that point forward. So zooming into the lower time frames, just to see where we are today and how that area, this region over here, around the 10,000 region, relates to where we are in price action today. So on the daily chart, I'm just going to go ahead and remove the SAR here. So I see a couple possibilities. Again, if we can go ahead and break above that 10,000 region again, I would be looking for a close above this 10.3, really 10.5 to 10.3 area. If we close above there, then I'd be looking for higher prices. That is the liquidity zone as far as I'm concerned at this point. The reason for that is we have major horizontal confluence in that area. So I believe I could just go ahead. So it's really right over here that you can see we had our breakdown, or we had a rejection into our breakdown in this run up to 14,000 in mid 2019. And then we had that rejection over here when we went back and tested. And then we had our major rejection here before our drop. So if we could get a close above that 10.5 region, that would be definitely positive for Bitcoin. But the other side of Bitcoin, I do want to say it looks like we're making a lower high here. That double top that we spoke about yesterday does still look like it's coming to fruition. Still manifesting, but we have some time to maybe change around this pattern a little bit. I do think that if it doesn't end up being a double top, maybe we could consolidate here for a little bit, just to shake people out, and that could go really in both directions. That could go in both directions. If we have a somewhat of a symmetrical triangle that ends up being printed over here, that wouldn't be too surprising at all. I think that we would end up breaking down out of that triangle. It really just be some time to convince, mostly retail traders that we might be heading up here, and then we end up just breaking down out of that pattern like that. Um, and that measured move would be based off something like that. And we could take that down here if we wanted. So that would be a possible trade there if we do end up forming a symmetrical triangle here. If we do end up doing some type of maybe downward sloping consolidation like this, if we continue rolling over, I think we'll also break down. We make another lower high, and we end up breaking down. As far as breaking down, what are the targets? Since the upside target is pretty obvious, I do want to speak about the downside. So as far as downside, I do like to use Fibonacci, and pretty much horizontals are my main go-to. So right away, as far as horizontals go, we could pretty much clearly see this region over here on the daily, which really maps out a few major points over here. This ended up being a pretty decent run up to 10.3 from that 7,000 region. So I do think that there's some importance here. It was major resistance here, and then we broke out of it there. So I think that that could be a nice stop point there. But breaking out the Fibonacci, I haven't introduced this yet. So just really quickly, Fibonacci is a naturally existing number sequence. And really, it's derived from ratios. You can look into it a little bit more, but as far as the charts today, we really need to know that the major main points here are going to be that your 1 should be, if we are looking for a retracement down, your 1 or your 100% retracement should be at the bottom, and your 0 will be at the top to show this at the start. The 618 or the 61.8% retracement is the golden Fibonacci ratio. And then I don't have it mapped out here because I don't use it too often, but the 618 to the 65 is the golden pocket. The 0.5 is the Dow theory retracement, and the 382 is just another Fibonacci number. So the 0.5 is not Fibonacci, but it is used in Dow theory, so we'll go ahead and use it here. One more thing about the Fibonacci retracement. A lot of people use it from top to bottom. In most cases, especially in parabolic drops or rises like this, I like to use the point. Really, most of the time it's the close, but I like to use the point where I think the psychology changed for a lot of people, and I think that that close right here, especially with the retest there, is the proper point to be using that as the 100% retracement. So if we do consider that to be the 100%, Dow theory got it pretty good over here with the 0.5 at around 7,200. Fibonacci got it actually really well over here, I think, as well, with the retest over there at 6,500, which would get you into the best entry. This does kind of actually map out its own trend line over there, which I want to use just to show that we do have a demand line here. Something along these lines there. There exists that trend line. So I bring that out just to show that we do have a pretty constant, easy to see line of demand there. And this is what also I would see kind of help bring the either symmetrical triangle or the ascending triangle into fruition on the chart here. So if over the next couple of days we maybe come back up to create and show that this line of supply over there is pretty constant, maybe we come down to show that here's some demand there, and we continue to do that over the next couple of days, then I could see maybe a breakout being possible. But like I said, we do wait for confirmation above those areas. So closes above those areas is what we're looking for. As far as the symmetrical triangle, if we see something like this where we maintain this area here, but then we continue to create lower highs, something like that. That's not the prettiest way. Let me actually redo that a little bit. So if we have it something like that, then I would be expecting a breakdown out of this region. And we could use something like the RSI or the MACD to show us some divergence there. But we will speak about that in further videos as well. But as far as simple price action, if we see lower highs here, even if we are maintaining higher highs, then I think that price action is most likely going to break down. But if we continue to maintain this area up here, even if we come down, we can show that our demand is reaching the supply area up there. And I think that would be much more bullish. So I just want to close out the video by quickly touching on the relationship between Bitcoin and equity markets today. So Bitcoin really was created out of the 2008 market cycle. Because of that, Bitcoin has only seen a positive equity landscape, which really just means that equity markets have been in an uptrend since Bitcoin has been created. Most recently, it looks like we are starting a new downtrend in equity markets, and so we are seeing the response in Bitcoin. And I do want to touch on that. So this major drop in equity markets did correlate with the major drop in Bitcoin most recently. It was about mid or early March. And since then, this uptrend has also correlated with the equity markets uptrend here. Most recently, these markets double topped right over here. Now, we are waiting for confirmation to see how and when this continues. But I do want to point out that most recently, on May 12th here, we found, if this is the local top, we found it here. Whereas the same day in Bitcoin here, 12th of May, we actually bounced off of this rejection area. So if we are showing that we might be decoupling here between equity and Bitcoin markets, I think that would be a really positive sign for Bitcoin. I think that it would show that there's a different value that we have in Bitcoin, that people have in Bitcoin compared to equity markets. I do want to go deeper into that in later videos, but that's what I wanted to touch on today. And besides that, enjoy the rest of your day, guys. Take care. Thank you for watching.